Everybody has that friend or that uncle that invests in real estate and brags about how easy it was and how passive it was. Is that actually the truth? Or is real estate investing actually like pretty risky and things can go wrong? In this video, we're gonna go through the things and the drawbacks of why people don't invest in real estate. Obviously, there are great reasons to invest in real estate. There are massive reasons not to invest in real estate. It is a personal decision. If you have the right team in place, the right people on your side, and the right education, investing in real estate, whether it's one property or 5 properties, is the best diversification of your money. But first, let's go through the things that really suck about buying investment real estate. For those of you new to the channel, my name is Darson Grantham, and on this channel, I talk about real estate investing. A lot of times specifically about Des Moines, Iowa. In this video, I'm just talking about real estate investing in general. The first thing on the list of reasons that real estate investing might not be the best thing for people is it has a really high upfront cost. If you're gonna get a loan, usually you're gonna have to bring 20 to 25% down payment for that loan. And so if a property is $200,000, you could have to bring $40,000 to $50,000 to the table at closing to purchase that property. Now, yes, there are ways that you can bring less to the table. There's house hacking, you can get creative financing. Trust me, I'm aware. But in general, we're gonna keep this pretty simple. You are gonna have to bring considerable amount of money to the table to invest in real estate. Again, there are ways to do that. You could use a 401k. There's a trick to that. Don't just pull it out. You could use a HELOC, home equity loan. There are different ways to put this down payment. You don't have to have just cash in the bank. Drawback number 2 is it does have some maintenance and some planning and organization, where if you're buying in the stock market, you just pick a stock and you click the buy now button and you transfer money from your checking account to the investment account. In real estate, you have maintenance, you have organization, you might have to build or put together an LLC. There's more pieces to that puzzle in real estate than there is in many other investment asset classes. Maintenance, are you going to be answering the phone calls from the tenants? Are you going to be the one providing repairs to the property? Are you going to hire it out to a property manager? Are you going to have to look over the bookkeeping? Are you going to have to collect rents from tenants? All of those are not passive ways to invest in real estate and things that you need to think about if you are looking at buying investment properties. Drawback number 2, market fluctuation. Now, I'm going to kind of counter argue this. Market fluctuations in real estate are much slower and more boring than the stock market. It's tougher to sell a property. It takes more time to sell a property at the highest price the market should tell you the properties than it is to just sell all of your Apple stock. So just remember, although the market fluctuations up and down in real estate, it's still pretty stable because markets don't go clear up and clear down. A lot of us that were around in the 08, 9, 10 financial collapse were affected by the housing market. And in reality, that is I don't want to say once in a lifetime, but it's a very rare thing to happen. The volatility of the market due to that scenario is pretty darn rare if you look at past history. Drawback number 4 is lack of liquidity. You can put your cash from your bank account as a down payment in a property. And when you do that, that cash is gone. You cannot go pull that liquidity out of that asset. Where if you bought stocks, you could buy on margin or use that margin to have that cash liquid. So it is up to you to figure out, is that risk worth the reward? Again, real estate does have risk. These are some downsides of buying real estate. Drawback number 5 is the vacancy rate of the asset that you're buying. Is it a property that people want to live in, or is it somewhere where people have to live because they can't afford elsewhere? When you're buying real estate, you need to figure that out. Where is the property that you're buying and how attractive is it? So vacancy rate, and sometimes you don't have control of the vacancy rate. It's just a situation where if I own a very high-end property, it's hard to find tenants for that price point because there's so few of them. Whereas if you own something that's more affordable to more people, you're typically going to have a lower vacancy rate. Yes, these are 5 disadvantages of owning real estate, but they are not for the faint of heart. it is something that there are tax advantages to owning real estate. You have appreciation, you have cash flow. It is a tried and true method to build wealth over time, not get rich quick in real estate. So if you are interested in learning what it might look like to buy investment properties, how do you start it? Where do you look at? What should the numbers look like? Schedule time below on my calendar. I primarily work with folks that are buying into Moines, Iowa. But because I started this YouTube channel, I actually will set up time with people that are looking at buying in other markets. I'd be happy to help out. Again, schedule time on my calendar, no obligation. If you want to just have a conversation and talk through what real estate investing might look like for you. Again, this is not get rich quick. It's not for everybody, but everybody should put a plan in place to buy 1 to 5 rentals over the time that they are full-time employment, because there is really good financing in place. You have a pretty solid economy to purchase in, depending on the location you're buying at, and it can be pretty passive if you do it correctly. And I'd be happy to help you figure out what that means for your life.